So what's going on, everybody? Welcome to day 2 of the masterclass. We've turned this into a masterclass. I think I said yesterday we will do that. And yesterday we went over the fundamentals of just the idea behind the approach to the market that you're now learning. I got a lot of private messages and public messages saying, thank you. I've cleared things up. I've opened your eyes to a new way to look at the market in a more simpler way. And this is really important to me, guys, because, there's a lot of you here. And for me as a mentor, there's nothing more rewarding than seeing all of you get results. Like you just don't understand. Like it is ridiculous. And I think the mentors that have been with us for the last, how long has it now been? 3, 4 months, 5 months, however long, they could testify to what I'm saying. Like as a mentor, when somebody turns around and tells you, thank you, I'm making progress, I'm getting results, man, geez, money just cannot buy that. So I'm really happy to have got those messages from you guys privately and publicly. And I do hope as we continue on through this process for the next 4 days, that will continue to be able to clear things up for you. But it's very important that you guys who have watched that video only once and still have questions to go back over it again and to take notes to make sure that you have got every little element of what you need to have an understanding of what it is we're doing with this approach. It is very, very simple, and it basically derives from the simple fact that at some point today, a candle has to close bullish and a candle has to close bearish. So let's take a look at gold. You can see here this candle closed bullish. No reason why you couldn't take this buy. Let's take a look at pound USD. This candle also has closed bullish today. No reason why you couldn't have taken a buy. I haven't taken a look at all the markets, but let's take a look. Fair enough. This candle closed bearish, but not the greatest, but you still could have taken a sell. The point is this, guys, the trades that you take, some will win and some will lose. But what I'm trying to drive home here is this, that at some point today, a candle must close bullish and a candle must close bearish. If you can accept that, you can identify that by just looking at the charts, and you can really start to believe in that, then there is no reason why you can't take a trade that looks like this when the candle starts turning bullish. There is no reason why you can't take a trade like this when the candle is going bullish. There is no reason why you can't take a trade like this while the candle is going bullish, however you want to do it. The point is this, guys, we don't want to jump in front of a moving train. If we take a trade in the direction that the candle color is, let's say this now bullish, then there's a very high chance that this candle will continue to close bullish. What we want to do is add confluences to our trade to get the best the best entries possible, so that we can take advantage of better risk to reward ratio trades, which is the edge that we have as traders that will make us obviously that will give us the edge. Yes, that is it. Just give us the edge, which is our risk reward ratio. So if you do have a sequence of losing trades, when you get a good risk reward ratio return, you're covered. When you have a good sequence of winning trades, you're laughing. Then it prepares you for the following week. When you have a couple losing trades, you now don't go into minus or back to break even, you stay in profit, and you just continue to compound those results over and over again, week by week. But what we've got to do, every single one of you, and you must accept this and understand this, we have to try and keep this super simple. Okay. Now, what I don't want you to do at the end of this week is start confusing what I've taught you. If there's anything that you need to know, I would have told you. So if anybody says to me, well, Rox, there's a key level here or there's a key level here, can I really be buying into it? If I haven't told you that you can't do that, then guess what? Do what you have to do. Because the point is this, traders, after the candles have played out, it makes logical sense why this would happen. If price breaks above a structure, it makes logical sense why price will come back to a key level. If price is closed bearish but doesn't continue bearish and then starts to turn bullish, it makes sense after it's happened that the depletion in that bearish sentiment hasn't maintained itself, and now it will make sense that it will continue bullish. You have to continue to talk out loud, create these stories with the evidence that you're given, and practice this every single day. Because once you do that, then it makes it a lot easier to be able to execute these trades. And the only thing that really holds you back is the fear and doubt. That is it. But once you start to believe, and I mean really believe, and I know I keep talking about this, and all of you might be thinking, oh, Rox, come on, get off it, man, just get on, I've got things to do. I need to drive this home, and I need to make sure that you get this locked in your head. It is only doubt and fear that's going to hold you back. Okay. So you need to believe in what I'm telling you and what we can see on the charts right now. Everybody can identify a bullish and bearish candle. At any point that that candle went bullish or any point that that candle went bearish, you take the trade. If it goes bullish and you buy, then it turns bearish and you tell me, oh, Rox, it was bullish first, now it's bearish, then I just say that's a losing trade. But you continue to repeat that process over and over again during a sequence like this, 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 your risk to reward will cover you. And that will be your guarantee that you'll be a profitable trader. So before we continue, do we have any questions so that we can cover this and understand the fundamentals so we can move on from this? Sorry, not cover this. Evans, I hope I press record, bro.
Hey, Rox.
Hey.
Hey, morning. Yeah, I have a question. Are you gonna, do you include in your analysis a recap or a review of the analysis of the markets from those various news sources? What the analysts have to say?
From what analysts have to say?
Yeah.
Hell no.
Because I think I saw a video, and you went on, like, I think it was FX Street, and you look at what the sentiment was, and then you went back to the chart.
That's me. Yeah. That's me just trying to cater to as many traders as possible.
Oh.
So, and that's me just trying to be too bright. Half the shit I talk about, I don't even understand. I just sound convincing. Listen to me. I don't really care, bro. The point is this, yeah? All I do is come to the charts. I identify the behavior of the market today. I see if I can find those correlations along with the sentiment of the market. Then I just use scaling down techniques to find early signs of the sentiment that I've identified from the higher time frame and enter. Bish, bosh, bash. I trade. I trade when I want to trade, when I can identify a trade. Sometimes I get lucky, and if I take a trade when there's news and I don't know there's news, then I get lucky. Sometimes I get hit, sometimes I don't. I'm not really a big fundamentalist, to be honest with you. I don't believe in it. I think it's all media and whatever else, and I just prefer to trade what I know to be true is going to happen today, that a candle closes bullish and a candle closes bearish, and that's me, bro.
So you use the two candle theory a lot then?
No, I don't use. I use the two candle theory, yes, majority of the time, but I use single candles on higher time frames to then judge lower time frames before I get to my entry time frame. But that is not something that will be taught this week. You guys will learn to do that yourselves over time. But this week, you will learn the two candle theory, which is 95% of what I trade.
Okay. All righty.
What I mean by that, let's say I'm looking at gold today and I can see this candle's pushing bullish. What I do is isolate the low and the area where the candle goes green. Now, the previous candle was red. So that means in theory, if I was following the two candle theory in the 4H, I have to take sells. But I don't want to miss an opportunity to take a trade when I can also isolate an area in the market where I can identify that price is failing to break the structures. So what I'm then looking for is for that initial shift in the market to illustrate that the sentiment is now turning bullish, an area in the market where I can place my stop loss if that's where I want to put it to be the safest. And then I'm just looking for behavior that resembles the high time frame candle, which is illustrating to me it's going bullish off an area where it's failing to break, so that I can take advantage of this move here like this if I wanted to. This was news, by the way, so I doubt I would have taken it. I don't know, to be honest with you, but this is what I do every single day. Now, if I'm trading the 15-minute and 1 minute, which I do more often than not, then I'm not concerned about what the previous candle was on the 4H. I'm now looking to trade what the behavior is on the 15-minute. So if I'm taking this trade, I've got to make sense of it before I take it, which simply means that I always identify these patterns, and you'll see this all the time, guys. It is price pushing to the upside, failing to break, and then the shift in momentum like this. This is a pattern, push to the upside, failing to break, and then the shift in momentum, okay? Now, in order for me to take this sell, I need to isolate the area where I'm going to take the sell below. And then I need to just gauge on the 4H time frame what the status of this 4H candle is. If this 4H candle has created a wick and turning bearish, I'm not necessarily then looking for a buy because of the previous candle close. I'm going to go with the bias of what this candle is telling me, which is currently bearish. Then I'll use a 2-candle theory in the 15-minute time frame to identify the structural lows, the area where I'm looking for the retest, and then the area in the market where I do not want to trade, which is going to be the break of this high. Once price starts to break above that high, I'm not interested in the trade. And as long as price trades between the range of the previous candle, I can now use scaling down techniques to go to the 1-minute time frame. I'm then looking to isolate the area on the 1-minute time frame where I'm starting to form the structures that illustrate to me that that bullish sentiment is now changing. We get the break of the structures, and then I'm looking for the first signs here to look to take a trade. Doesn't matter if I would have taken it here. This is for illustrative purposes. But what I'm doing is then doing something like this to then take a trade on the 1-minute time frame as part of the 2-candle theory to take advantage of a much bigger range, because I get a better entry on the 1 minute. Does this make sense?
Yeah. One other question. Read a 2-candle theory. Isn't it like the top wick and the very bottom wick you use, or is it the let's say the top wick and where price is at presently, which would be a pretty different thing?
No.
So you use.
So you just asked me, was it use? Somebody just asked me how I trade. And do I use a 2-candle theory concept? And I said, yes, 95% of the time, but sometimes that's how I trade as well, using single candles. So that was just illustrating what I was saying. If we continue on with the show today, you're going to start to understand how you can use it yourself. Okay.
Okay.
So I can see in the chat somebody's obviously upset. Dan's upset that he's down on his challenge. I understand, bro, and it hurts. Pretty uncomfortable. And this is the business you're in, Dan. You have to accept it, buddy. It is a business where the markets are very highly manipulated, and during news events like CPI, the big boys can do what they want without getting in trouble. Yeah, so you just have to make sure that you're keeping on top of it, bro. Especially if you're in a challenge, if you're up in profit, you need to be looking to take partials. I think you went break even and it shot straight through it, but it happens, bro. It's going to happen to you many more times and many more times and many more times. Just learn to build resilience, because in the future, when you're trading big money and this happens to you and you get slipped for 30 grand or you get slipped for 40 grand, you're going to know about it, bro. And if this is how it's affecting you now and you lose 30, 40 grand in the future, if you get to that stage, which I don't doubt you can get there, bro, you're not going to just be effing and blind and you're going to want to take your life. So start building some sort of resilience towards this. This is just part of our day-to-day business. Always be accountable for your results. If there was news, be on top of it. If you're close to 3-hour profit, take your profits. Don't hope for the market to go in your direction, okay? But you're absolutely going to be fine. Trust me, bro. I know you've been working hard, and I know you could have passed your challenge, but trust me, Dan, I get pissed off as much as you do, but please keep your head up, stay focused. You got to bounce back from this, man. What doesn't kill you only makes you stronger, all right? So I don't know how long the video will take after this, guys. It renders for a bit and whatever else. So, guys, do we have any questions on the fundamentals of this strategy, not the intricacies of it?
Hey, Rox.
Mm-hmm.
How do you determine the current status of the 4-hour time frame? If let's say like
did you not watch? Did you watch the video yesterday?
Yeah.
But did you though?
I watched half of it.
Yeah, there you go. So go back and watch that video, and I promise you'll get your answer.
All right, thanks.
Yeah, please, guys. If I was in your position and I was getting knowledge like this, and I'm not saying that it's the Holy Grail, but I can tell you for a fact, it is pretty powerful. I'll be watching every single second of that video. I'll be taking notes at every single minute of it to make sure that I've transcribed the whole damn video, just in case Rox decides he's deleting it tomorrow. There is no way I'm going to let that go past me. Okay, so please go and watch it. So guys, let's go. The 2-candle theory concept is simply derived from the fact that if a candle closes bearish, there is a high chance that the next candle will continue bearish. There are a couple stages of a candle forming, and that is a wick must form first, then a body next. If it's going bullish, it's a wick first, a body next. Everybody should know this. So in order to take advantage of really good risk-reward ratio trades, we have to find areas in the market that we can take advantage of better risk-reward ratio trades by identifying the potential setup before the setups happened. That means if price breaks a previous structural low in any sequence and the wick has been formed, this is called what? What kind of trade is this called here? A breakout. If the market pulls back to around 50% of the previous level, what kind of trade is this called?
50%
retracement, retest trade, okay? Now, if the candle pulls back to the 50% retest, what color is the current candle status?
Green.
Great, good. What color is this candle again?
Red.
Okay. If the current candle is green, and I've just said you sell when the candle is red, how difficult do you think it could be to take a trade psychologically because of the colors or because of the current status of the candle? Anybody think it would be difficult?
Psychologically, I'm gonna eyes when you should be going to sells.
Correct. Psychologically, it could be difficult to take the sells because the current candle is green. But how many times have we seen that price closes bearish, the next candle is bearish, the wick is formed, and then it closes bearish?
Many times.
Many times. So instead of being the trader that decides to wait for the candle to go red, we now need to start to do what? Build a belief system that if we get the evidence that the market is pulling back, even though the candle is green, we can still look for sells. Reason being is if we get into the sells early, as opposed to waiting for take profit down here, we can get take profit here. But how do we do that? What do we have to do?
Gather confluences.
We have to scale down. Okay. We have to scale down. Now, in scaling down, what does that create for us? Well, let's say the previous candle just closed bearish. We are anticipating the next candle to go bearish. The current candle that is opened is now pushing bullish. And we want to see the market make a new lower low. The formations that we'll see on our intraday timeframes should be a clear downtrend with an area in the market that price is now pulling back to create either a retest of structure or create a lower high of structure. Once we get either the retest of the previous structure, a retest of the low of the previous structure, or the lower high, what are we now looking for?
Wick projections on the lower time frame.
Momentum shift.
Fine. Now, in order to get momentum shifts, we're going to need to identify potentially indecision candles. We're potentially going to need to identify momentum candles. We're potentially going to need to identify pin bars or wick rejection candles. Make a note of this. This is the only thing that you're going to be looking for as a trader. This here. This information here. This is the only thing that you're going to be looking for when you scale down to your lower time frames. Now, let's say that I take the sell when I identify these things here, and then price starts to shift in my direction and then pushes bullish and stops me out. Is that a bad trade?
No.
It's a fantastic trade. Let's say the market starts to push bearish and now we get to one-to-one break even and it turns back and stops me out and then continues bullish. Is that a bad trade?
No.
Not at all. What do we classify these trades as? Simply just losing trades. Remember, what are we relying on? We're relying on our risk to reward ratio, which is our edge to ultimately make us money in the long run. So then if that is the case, should we fear entering, even though the candle is bullish, when we want to take sells?
No.
Because we have to create a belief system that all this candle is doing is what?
Just a pullback.
But what is it creating?
The wick
Awake.
A wick before it then does what?
flips and pushes.
Turn bearish.
Flips and turns bearish. If we scale down to our lower time frames and we see indecision candles, what does that tell us?
Buy is not working.
If we need something a bit more specific.
Rejection.
There is a depletion in this bullish movement. If we get a bearish momentum candle, we are seeing a depletion in that bullish momentum. If we see a pin bar wick rejection, we are seeing a depletion in that bullish momentum, meaning that price is doing what? It is failing
To break.
to push higher. If price is failing to push higher, and we see that this previous candle closed bearish, what does that illustrate? That the momentum, carry on, the bearish momentum is still strong. Now, can you see how, from a logical perspective, how this all makes sense? There's no science behind it. And this is the simple theory behind trading the two candle theory. Now, let me ask you something. Let's say we have a key level here in the market. We see that price has come bearish, push bearish, push bearish, push bearish. Then all of a sudden price rallies off of this level when you see the market continue to push bullish. Then the market comes back to this level after a long period of time. If I get a bullish candle closing off of this level here, can I now look for buys?
Yes.
Yep.
Yeah.
The reason I can look for buys is because in this scenario, it makes sense. Now, what comes first, the story or the evidence?
Sorry.
Evidence.
The evidence.
Evidence first. Because if we are waiting for price to come back to this level and we create a story in our heads that price can bounce off this level and go bullish, what are we going to start doing? We're going to start scaling down. We're going to start looking for evidence on the lower time frames to look for those entries. And then what could happen? We could enter the trade and the market continues to fall down. So we're not looking for the story first. What we're looking for is the evidence to then make sense of the story next. So if this candle closes bullish off of the support level, even though this structure is in a downtrend and we haven't broken this structural high, can we take a buying opportunity?
Yes.
Yes.
Very good. And the reason why we can take a buying opportunity in this scenario is because of this reason. Let's say now we identify a 4H candle close. From a 4H time perspective, what does this level indicate to us?
Previous high.
Our last lower high, meaning that as long as price trades below this level, we're good for what?
So
Sell.
Correct. In a push phase, what do we anticipate the market to do?
Retest of the
Exhaust.
previous high.
create a lower low.
Now, if this candle closes bullish, I'm looking to take this trade where? Here. The current behavior of the market is indicating a bullish sentiment. If I identify on my intraday timeframes that I get a bullish close and I want to enter the market and place my stop loss below a high low on the intraday timeframes, is it wrong for me to take a buy?
No.
No.
I'm not anticipating that the market's going to come up here because I'm not trading the structure of the market. I'm trading the behavior of the candle. So if I get an entry around here and I'm fortunate enough that the market's behavior continues to continue in the direction that it's just showed evidence of, then what's wrong with me entering here, taking advantage of a 4H range candle back to the high here, taking profit, going break even or taking partials before then the market structure decides to continue in the direction it wants? There's absolutely nothing wrong with that, right? Does this make sense to you guys?
Yes.
Yeah.
Yeah.
What I'm trying to do here is just build an understanding of what I mean, what it means to trade the two candle theory. Are we focused on what the structure is doing per se? Or are we focusing on what the candle has just told us to then look for the support and evidence to execute that trade, regardless if we take a buy in a sell bias market? Because you have to really think about this. And this is what's so crazy about the whole situation here is this. You have 1 hour, 2 hours, 3 hours, 4 hours allocated, however long, I don't care, to trade in the market. This is 4 hours of your time. This is 8 hours of your time on the close. Why do all these other 20, 30, 40, 50 candles have any relevance to your life? They have zero. Let me tell you something also as well in this scenario. If price pushes bullish, then eventually comes back to this key level, and then we have a bullish candle close, sorry, a strong bearish candle break below this level, how important is this level to you now?
I'm probably going to erase it.
It's irrelevant. But if price bounces off of this level with a strong bullish close, how relevant is this level now? Very. Please remember that. When we come to the charts and we see what's happening here, how relevant is this level to us?
16 hours worth of information, so it's pretty relevant.
But the candle's closed strong bullish. We could even say that it's closed below this level. I would hope you wouldn't do that. Only intraday traders will do this. You want to isolate your area where the wicks are forming, right? Are we looking for sells or are we looking for buys?
Buys.
As part of the two candle theory, we're in theory looking for what? Sells. But in order to look for sells, we need the market to convince us that it's going to continue bearish, right? So in a scenario like this, if we place our level here, and then we look to take the sell on the break of the low here, this is now classified as what? Our retest area. This is now classified as our breakout area or our break and retest area. Okay. Is this candle convincing enough for us to take the sell if we get a retest?
Yeah.
Okay.
Not really.
If price pulls back to make the retest, what is our range?
50%.
Yeah, I know that, but what is our range for sells?
To the first area you marked.
Correct. Back down to this low. Now, 33 pips is a lot of pips, but let me ask you something. If you're trading this on the 4-hour time frame and you get a wick that forms like this, pushing bullish, yeah, you have a wick that forms like this, then you get down to your lower time frames and you see a bearish close, and then you place your stop loss above the wick. Do you think that this is a favorable trade?
Yeah.
Yeah.
No.
From a 4H perspective, is this a favorable trade?
Yes. Yes.
It's not.
Why?
Because you lose the range of the 4H candle. The only way you can execute this trade is by doing what?
Scaling down.
Scaling down. When you scale down, what you're then able to do in this scenario, let's go to the 5-minute. What you're then able to do in this scenario is you're able to decrease the range of these candles at the 50% retracement mark. So what may look like an entry on the 15-minute, let's say something like this, or the 4-hour, you can now use what we just shared a minute ago, identifying marks like this, that now increase your ranges of winning that trade. Now, I tell you why you need to be aware of this, because what we have here is a scenario where we do believe the next candle will be bearish based on the information. And this isn't just based on the fact that the candle closed bearish. We have to make sure we're gathering our evidence. But based on this scenario, we're also seeing that price is not breaking the low either in this sequence. Does this make sense?
Yes.
Okay. If we had a scenario where the price has broken this structural low, and no, let me find a better one, this scenario. And I'm going to go over some really good examples in a minute, right? But let's say in this scenario, we have an area where price is broken this level. If price retraces back, do we need to be concerned about this structural low? Do we need to be concerned about this structural low?
Not really.
No, because this is the area in the market where price failed. We have the evidence of price breaking, and now we can just anticipate a very simple, easy continuation trade. The reason why I'm highlighting this, guys, is because a lot of you just think that if there's a setup, I can take it because it looks good. What I want you to start doing is identifying high probability trading setups based on how the market is forming in terms of the scenario that we have here when we have the break, not concerned about the structural lows, versus an area here in the market, which may not look significant to you, but at the time, you can clearly see that the market is doing what? Doing not much. And when I woke up this morning, I decided not to trade because in the back of my mind, I could just see that the market is not doing too much. What I am convinced about is if this does decide to continue bearish, then I don't need to worry about jumping into this trade now. What I can do, let's give it to you in the opposite direction. I don't know if it's going bullish, but I do know that if it doesn't continue bearish and it starts going bullish, what I can then do is start using scaling down techniques to identify the area where price is failing to break, identify the structure of the market that potentially resembles the same behavior. And I mean, this is not a great example, but then take advantage of breakout trades that look something like this. The reason why this becomes a higher probability trading setup is because now the behavior has spoken to me first, and then I can see the evidence. Oh, sorry, I can see the evidence, and then the behavior spoken to me, illustrating that that red candle, that 4H red candle didn't break. The behavior is now shifting. The current 4H is bullish. And now if we start breaking the highs, there's a very high chance we do what? Make a new higher high in the sequence. Does this make sense?
Yeah.
I hope so. So what this will help you to do, right? Or I'm hoping it will, is it will help you to determine one important thing. The most important thing in a sequence like this is this. If you have areas of traffic or support or resistance where you can see the market is not breaking, what trade idea is best in this sequence? What trade is best in this sequence?
Waiting for the breakout.
Very good. It makes sense in this sequence to look for a breakout because you had added confluence. If the market is speaking to you and you don't have anything for price to resist, then you can look for what? The retest. Please tell me you guys are not getting confused. Aaron, yeah, fire away.
Hey mate, sorry, so if I can just draw this on here, mate, just to clarify some up if it's going to let me. I do apologise, I've never used this before in my life, but this area here, if we was to consider this a break above a major key area in the market where price failed to break above, it did some moves and now we broke above it, would we be wrong to look at potentially a 50% retracement as well as the two candle theory for it to come down back to that red
100%.
level in the market and then continue to the upside?
100%.
Right, just to clear that up, thank you very much.
Let me explain something. What is a better entry? Here or here?
Further below.
All right. If you miss the best move, what you're supposed to do? Stay out.
Second best. Oh, Right, fair enough.
Yeah.
Right.
Stay out.
No worries. Thank you.
If I took this sell based on the 2 candle theory concept, or based on what I just told you, a candle has to close bearish, I can only take this trade in theory back to this level here before I have to think about management, simply because it's around the 50% retracement of the previous candle. Okay. If price comes back to this level, then I have to question whether I'm going to be looking for the 50% retracement of this previous candle, anticipating this one to go bullish because of, firstly, the status of the 4H candle, which is strongly bearish, and the fact that this is a very strong move to the upside that can be corrected based on news. The reason why trading strategies, the reason why trading strategies cannot be made rule-based is because of the variations. Okay, I think we're going to go too difficult here, but what we have to be considering at the time is what evidence makes sense in this instance. If the range of this 4H candle had pushed, let's say, to a decent range, then it would make sense that there's a higher chance this can continue bullish. Let me just tell you why. Every candle has a range, right? If this candle has pushed bullish and we're looking for that 50% retracement, and we can identify that the range of this hourly candle has met the range of the previous candles, what is the chances that this candle will continue to push bullish? It's very slim. Also, if this candle we can see has pushed strong bullish and now creates that top wick, we don't need the daily to identify that, because we can identify it from this range of this candle here is huge in comparison to the rest. What is the chance of this continuing higher? Very low. Look here, we have a candle that pushed really strong bearish, and then look, we had an immediate correction. You guys need to understand, you guys should know this or be aware of this through your own experience in the markets. So if the candle pushes a decent range and gives us a half decent candle size, as opposed to a really strong, overextended, flipping, humongous candle here, then the best thing for us to do is just to say, what? Maybe I missed the best move, which was the breakout of this area here to take advantage of this range. And now instead of FOMOing and thinking price is going to continue up, I either look for the sells because I expect the 50% retracement, or I just stay out of the market and wait till tomorrow. Does this make sense?
Yeah.
Yes.
Okay.
No,
Go on.
no, I was just saying, yeah, it makes sense.
The candle sizes make a huge difference, but there is no right or wrong answer to any candle size. It is specific to the times that you're trading, the pairs that you're trading, the correlations that you're finding, and the sentiment of the market at the time. Like, I personally know from experience, I would never enter a buy after this. Ever, 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 ever take a buy after this candle closed. Ever. What I'm looking for is for the accumulation phase over here, for the market to start showing signs that it's failing to continue to push higher. And then I'm taking advantage of this. That is 100% fact. I'm taking advantage of this move here, or this move here. I just explained to here, because now what I'm saying to the daily candle, or whatever candle that I need to highlight on the daily, I'm saying to the daily candle, okay, you've pushed really strong bullish already for the day. Now I want to enter buys, just continue pushing bullish for me. I know that the best entries on the daily are going to be down here. So if I'm taking a trade, I want to be hitting my trades around here, right? Around this area here. I'm not saying that it's the best area, but okay, let's just do this, right? I want to enter around here. Let's say this is what I'm looking for. Is this the area? Yeah, whatever, don't care. I'm just trying to highlight a point. I know this is the best area to enter. If I miss this move, that means I've missed an opportunity to gain what, 150? Well, I don't know how many pips this is. Looks like 150, but missed this whole move. Versus now saying, oh, it's push bullish. I've now identified it's push bullish because it's push bullish, and let's enter the trade. That is not something you want to be doing. Okay. So I just explained, if you enter a trade, you want to be hitting it where? When the price falls back to the 50% for a decent enough range candle, or when price takes the breakout, again, if the market has got enough room to move to the upside. during a high volume period. Yeah, ask the question.
Hey, Rox. So quick question. All of these patterns, double tops, double bottoms, break and retest, 50% retracements. All of these patterns are based off of the 2-candle theory. So no matter what trade you're taking, you're looking at that previous 4H candle and making your decision based on that.
Correct.
Every trade you take, everything you do.
Correct.
Okay.
All the way down to the 1 minute.
Right. Okay.
No, but if I'm trading 15 minute, I'll use 4 hour. If I'm trading 1 minute, I'll just use 15 minute.
I see. Okay. Thank you.
Okay. Okay. So let's just take a, does everybody understand this?
Yes.
Yeah, put it in the chat for me so I know that you understand this, please. Okay, cool. You're going to get some examples.
What?
Hi.
Can we buy 15% retracement after?
Can you buy a 50% retracement after what?
After the retest?
Definitely. That is where you want to get in. We just spoke about that. So if you're buying, the color of the retracement will be red, and if you're selling, the color of the retracement will be green. But you're anticipating the wick to form first.
All right, thank you.
Okay. So remember, traders, I said to you, when you're looking at the charts, you need to make sure you're zooming in. If we look at it like this, is there any trading opportunities? No, there's not. If we zoom in, now we're in business. Hey, this is a great example of what I just said here. This is a great example of what I just said here. Look at this area in the market where we can start to see multiple wick rejections and whatever else. Just because this candle's closed bearish, it doesn't mean that you're going to be looking to sell it. Even let's put it here. What you want to be seeing is clear structure in the market. Okay. So look here, we have an area where price broke above. I think we spoke about this yesterday. Does this not look clearer than this information here, even though this candle's closed bearish?
Yeah, it's clear.
Okay, look here. This candle's closed bullish. Just because we follow the 2-candle theory, do we want to be buying?
No.
Right. Does this not look clearer?
Yep.
Okay. This is where I need to get you guys at. Let's say now we're looking at this scenario here in the markets. We can see prices just broke above this area. Is this a buying opportunity after this candle closed green?
Yep.
Okay, but what do we have to consider?
We're not a pullback phase.
No, forget about that. We have to
Okay.
consider this area here where the wick rejections are. Okay, let's say now this candle closed green. Can we buy?
Yeah, we have a little range.
Yeah, we have a nice area back to the upside.
Yep.
Okay, if this candle closes bearish, can we sell?
Yeah.
Absolutely, we have enough room back to the downside. Look here, price created the level. This candle closed bullish. Can we take a buy?
Yeah.
We can consider it. We probably wouldn't take a 50% retracement on this, would we? But we might take a breakout. Using 2-candle theory in the 15-minute time frame, we can look for opportunities. Does everybody see how this is? Like, we just have to use common sense here when looking at these scenarios. And I think opposed to common sense, I've been really trying to think about this, but as opposed to common sense, it is just what it is, right? Some days we're going to come to the markets and the trades are going to do what? Work out for us. And some days they're not. As long as you're following the rules that you've created based on the fundamentals that you're learning, then in theory, there's no reason why you should be a profitable trader as long as you're not doing dumb shit. So now it's just time. So now all it requires is enough time for you to identify what works for you, what doesn't, during what sessions, on what pairs, what behavioral patterns you need to abide by or display in order to get the best out of the markets, the decisions that you have to make whilst in trades, whether you're a break-even trader, half stop loss, partials, 1 to 3, 1 to 5. This is what you guys are going to have to work on. The approach is very, very simple. If somebody took a sell because they saw that this candle closed bearish, I would be thinking in my head, you're nuts. Because this is something I know that I would never trade. I'm more happy to take a sell here because I see an overextended market and I anticipate the market to go down. But because this makes more sense in this scenario and I lose this, it's fine. But taking a sell like this or like this in this scenario, it makes no sense when the market is speaking to us. Okay. What about this current candle on GJ now as previous close bearish? So the previous candles closed bearish. So what I'm doing in this scenario is just isolate my structural low, 50%, and my structural high. I'm now anticipating pound to be weak. I need to see pound weakness, okay?
I'm looking short on that myself, if I'm being honest.
So I need to see pound weakness. Pound is not weak. At the moment, pound is not weak. So now I need to check for yen weakness. CAD needs Aussie dollar needs to go up. CAD needs to go up. New Zealand dollar needs to be going up. I see this. I see this. USD JPY. Now, yen is not weak. So that means I'm relying on pound. Sorry, yen is strong. We're looking for yen strength. Pound weakness, yen strength. Sorry, yen down. Nope. Yen down. Nope. Yen down. Euro weakness. USD down. So euro is showing signs of weakness. Yen down. Now, so now pound is not weak. Previous candle closed bullish. Previous candle closed bearish. So there's no confluence. Secondly, I'm relying on JPY strength. Yen is definitely not strong. Looking at the market structure. So that means that this trade is literally, well, I don't know any smart sayings, but this trade is just a death wish, a death trap. But if you are trading this, what you're looking for is for price to come back. Now, don't even trade it, man. It's up to you, whatever. But you're looking for price to trade around the 50% region, or you're looking for price to create a strong bearish candle close or multiple wick rejections to isolate then a structural low that you anticipate price to break, and then you're looking to take the trade once given that evidence. There is no evidence here whatsoever to take this trade. And I think with the market analysis, the way we've just gone over it, there is absolutely no evidence that you should be relying on yen strength or pound weakness. Does this make sense, guys?
Hey, Rox, is that how you identify currency strengths in the morning? You just tell yourself
Correct.
JPY up, JPY up, JPY up.
Correct.
That's what you do?
Correct.
Got you.
Now, you guys might be saying, well, is that enough? Well, go to the days where the markets have moved really strong, right? Let's go to the days when the markets have moved really strong. Let's start from here. This is 8th of April, 6 and 10, right? On pound USD. 8th of April, right here. So if we see that the market conditions on the 8th of April have been moving strong to the downside over here, and we can see that here it hasn't followed the same, what could that suggest to us?
That's not as strong as we think it is.
Correct.
Yeah.
And I beg you guys really trust me when I tell you this. It's probably best to stay out of the markets because there's probably a lack in volume. Okay. Or there is not enough correlation that lines up to push the market in the direction we want it to go. I'm trying to find something that does correlate. Let's take a look at this. This is on the 11th of April at 2 o'clock in the morning, 2, 6 and 10. 11th of April. No, again, we don't have a correlation there because we have a discrepancy with yen and pound. Let's try and find, I just want to show something to you guys where we had strong market conditions. Oh, this might help. Please, God. Yes. Look here. Okay. Strong bullish, strong bullish, strong bullish, strong bullish, indicating what? Potentially Aussie dollar strength. Now look here. We have it lining up. Strong bullish, strong bullish, strong bullish, strong bullish. Please be up. Yes. Strong bullish, strong bullish, strong bullish. If you start to see this behavior, let's say at 2 o'clock, and you start to see this behavior at 2 o'clock, and then you want to trade Aussie dollar JPY, and you see this behavior at 2 o'clock, guess what that gives you? Immense amount of confidence to say, hold on, Aussie dollar is strong. It lines up across the market. I can't see anything going on with pound or USD, but I can see Aussie dollar strength. Here's confirmation that I'm on the right side of the market today. So when you do scale down, you can then do what? Look for potential trading opportunities. And I'm telling you, guys, I'm telling you, at one point or another in the day, you will find that if the currency that you're trading is strong, the market conditions will line up. And that is what you call a high probability trading setup. What date is this? The 10th? No, it wasn't the 10th. 6 at 10. 6 at 10. 6 at 10. Money, money, money. You know, money, money. Like today, the reason I didn't trade is because of the market conditions. I just couldn't understand. On pound, one was going bullish, one was going bearish, and then in gold, it was what was gold doing again at the time I was at the charts? Oh, I don't remember, but it wasn't doing anything special. Okay. And that is it. I'm staying out of the markets. I'm not then saying to myself, oh, look, this candle's closed bullish, this candle's closed bearish. Oh, hold on, this candle's closed bearish, time to look for sells. Because if this candle closes bearish, what time's this? 12 at 6. 12 at 6. 12. Yeah, that candle closes bullish, bearish. Now you're saying, oh, I'm looking for sells. Then you go over to pound and then it's done this. It doesn't make sense. Do you understand? To look for a continuation of that. What you will find, guys, is one pair will lead, the rest will follow. I hope I've driven home this point. And this is what keeps me out of the markets, guys. This is what keeps me out of the markets. When I can't make sense of why pound is supposed to be strong on pound JPY, but it's weak on pound USD. I want to trade the days when I can see Aussie dollar is going ham. Boom, boom, boom. Then I'm confidently going to take trades all day long. If I don't see it, then you have to stay out. If the market conditions, and guys, all you have to do is just go to Slack and see how many trades have been posted when you wake up. If there's one trade or one trader that posts a trade, and that's all you see in the morning, that's probably enough evidence for you to say, you know what, time to hit the gym and then come back later. Okay, do we have any questions on this?
This is being recorded.
Yeah, it's being recorded. What's the question?
If I'm trading GJ, if GJ is the pair that I'm trading, would GU and UJ good enough to look at for currency strength?
Yes.
Okay, thank you.
Okay. Let me ask you guys a question. At this pre-London, right, on the 6 o'clock close, can you all identify Aussie dollar strength?
Yeah.
Pre-London, on the 2 o'clock close, can you confirm that Aussie dollar strength?
Yeah.
Pre-London, on the 6 o'clock close, can you continue to confirm that Aussie dollar strength?
No.
Yeah.
Okay. If the markets line up, there's a very high chance you're on the right side of the market today. If you have to struggle to figure it out and you keep going backwards and forwards trying to figure it out, there's a problem. That is your sign to stay out of the markets. You will make a lot of money when you know when to walk away and not trade. And you'll find a lot more peace as a trader because you won't feel like you're forcing the process. Like you see this shit right here. This is something I would never trade. Makes no sense. This closed bullish, this closed bearish, and I don't care if there's CPI news or whether dollar is weaker than the pound or yen is stronger than the pound. I want this to line up. The currency on the left. Actually, that is such a good lesson. I want the currency on the left to line up. If it lines up, I'm involved. 2 o'clock close. 2 o'clock close. Boom. New Zealand dollar strength at the time of the close. Bish, bosh, bash. Scale down. Look for my trading opportunity. Jump into the markets. Again, 2 candle theory concept. If I'm looking to take advantage of 2 candle theory concept, I'm looking for, let's say, 6 o'clock close. I'm looking for the bullish close. I'm then isolating my retest level. I'm scaling down to the 1 minute time frame. And then I'm saying to myself, oh Lord. I'm saying to myself at 6 o'clock. Oh, that's more of a pause and go there. But I'm saying to myself, okay, previous market structure, the behavior of the market, pushing bullish, 15-minute close bullish. Now it's an opportunity for me to take a trade after the candle close. Where do I want to take it and what makes sense to me? Maybe this. Depends how I'm feeling at the time. Depends how I identify at the time. But maybe this. Okay. That is.
Can I ask something quick?
Pardon?
Can I ask something quick? So based on what you just said now, right? If you look, say at all dollar pairs, say NU, EU, GU, all of that 4-hour close strong bullish. So that give you confidence to look for a buy against one of them.
No, I don't care about yen or USD in this situation. I'm looking for. That's a great question, by the way.
Now I'm talking about now current price, like EU, GU, NU, AU, all 4 hours close strong bullish. So would that be confidence enough for you, or would you look?
You're talking about current, like right now.
Yeah.
With this close bearish, so I'm thinking straight away euro weakness. The previous candle closed bearish, so yeah, euro weakness. The previous candle closed bullish, so now there's a discrepancy, right?
Yeah.
Okay, but what I'm now looking at is what is the current status of this 4H candle in this scenario. I've either got to do one thing: identify the status of this candle, because I have 2 confluences here, which is euro Aussie dollar showing signs of euro weakness and euro yen showing signs of euro weakness. If I find a discrepancy after I've got these 2 confluences, I need to figure out what the current status of the 4H candle is, which is bearish, which goes along with what we said. You can sell the 4H candle if it's bearish, as long as you get the evidence. Or now we have to figure out if the euro is weak or if the dollar is strong. So if we're looking for the dollar strength, New Zealand dollar USD should be pushing bearish. USD CAD should be pushing bullish. And USD Swiss franc should be pushing bullish. Okay. So now we've got weakness with the euro and strength in the dollar.
Yeah, but now you're looking at the open candle, not the previous close.
Yes,
Yeah.
of course. Yeah.
All right.
Here we have previous bearish close, which is an indication of what? Euro weakness. If you use a third pair and you get a discrepancy, which is a previous candle close bullish, you now need to justify why euro wasn't strong on the previous close. Oh, sorry, euro was strong on the previous close versus being weak here and weak here. Does that make sense?
Yeah.
Okay. So in a scenario like this, what I'll be saying to myself is I'm identifying euro weakness. It's a shit time to trade, by the way, guys. But let's say I identify euro weakness and then using scaling down techniques to identify the behavior of the market on that candle close. And then I'm saying to myself, if I get the bearish sentiment shift, which will be this information here, I can look to take the trade. Now this becomes a very high probability trading setup. Not at this time, guys, but this is how you would approach it, because we've identified the euro weakness and we've also continue to add confluence to that by looking at euro Aussie dollar, previous candle close bearish. And then we're also identifying over here that the euro is pushing bearish at this moment in time. If the euro is weak, every euro candle should be going bearish. So now if we take a trade, all we're anticipating is that this 4H candle being the one that's lagging right now, should continue to follow through. You can validate this one last time by saying to yourself, okay, I believe euro is weak. Let's just see this one last time. Is the yen strong? If the yen's strong, then you don't want to trade it. So for Aussie dollar JPY, it should be going bearish. It's not. For CAD JPY, it needs to be going bearish. It's not. For New Zealand dollar JPY, it needs to be going bearish. It's not. So now this does not become a high probability trade anymore because the yen is not strong, only the euro is weak. Does this make sense?
Yeah, cheers, bro. Thanks for that.
So based on that, I can avoid taking a trade that is still a good trade, but I can avoid taking a trade because it's not a high probability trade and setup. Like I said, if the market is moving, guys, you will see the market moving together. We have great evidence here of weak euro, great evidence here of weak euro. We have a discrepancy here. Previous candle closed bullish. That is not something we want to be involved in, because now we've got to go and do the research to figure out if the dollar is stronger than the euro, for the reason why this did not continue bullish. Continue bullish. So now, if we were to trade this, we will be isolating the low, the middle, and the high. And in order to take this trade, we need to identify euro strength. Did the previous candle close bullish? Oh, no. But what is the current status of this candle? Bullish. Did the previous candle close bullish? No. What is the current status of this candle? Bearish. There's a discrepancy. So now I need to validate that the euro is going to be strong because dollar is weak. So New Zealand dollar needs to be pushing bullish. It's not. USD CAD needs to be pushing bullish. Maybe. Needs to be pushing for this to go up. It needs to be USD weakness. So I need to see this pushing bullish. I need to see this pushing bullish. I need to see this pushing bearish. And I need to see this pushing bearish. It's not happening. So there's one or two things that's happening right now. The market's super low in volume, or there's no momentum. Or just today, just for today, there is just not enough evidence of any currency strengths or weaknesses that we can rely on. And that means stay the hell out. Who feels like today was tougher to trade than yesterday?
Yeah, Don.
There you go. So I'm not making up shit here when I'm telling you this. Okay? We all can identify the markets are bad. I'm just trying to illustrate how you will identify that by looking at the behavior of the candles in the day, or at the time you look at the charts. So I'm not going to be trigger happy to scale down to take this trade as a buy if this candle closes bullish for the sake of trading today. Hell no. Because I've already looked at the market sentiment, which is this information here, and it's not telling me much. It's not convincing. And for that reason, I'm out. Go on, Brian.
Yes, Rox. When you isolating that single candle using the horizontal ray, do you just isolate it by the body and not the wick?
Yeah, so this is something you're going to have to just learn to do through experience. But in this instance, it makes sense that I can isolate this candle. Okay. If the candle's a very strong bearish candle like this, I'm not going to trade, because the market has to do too much for it to pull back to this level. And I've already said this in the beginning. It just doesn't feel right. Okay. The range of this candle is decent, so I will mark it. The range of this candle is way too big, so I don't even want to see a candle pull back here. I prefer to look for the breakout. Or more often than not, I'm staying out of the market. If the market creates a wick like this, then I'm not going to isolate this as my 50%. I'm going to say, what range can I use? I'm not going to use the high of the candle in this instance like this, because I know this is in theory where price is not going to come back to. So I'm looking for an area where price could find that reaction. And in this scenario, this makes more sense to me, because this is the area where price is rejected and failed to close above. So I would isolate this high and then the area where I want price to break out of, which is this low. So then that will now be my range. This will be my 50% range. And then in a situation like this, what I'm now looking for is scaling down opportunities to look for the retest of that area in the market, which is going to be this information here. So this is the close, which is this information here. So now this would be the trading opportunity that I would be looking for in this scenario based on the range of the wick that's created here and here. And then I'm looking for price to isolate or make a low, stop loss above, and then take advantage of this trade. Does that make sense?
Yeah, that it does.
You guys are not going to get definitive answers with me because trading, there's nothing definitive about trading. It's just variations that you have to start using and getting used to. Okay, tell me this is not what just happened. Oh, cool. All right,
Hey, Rox.
Yeah, go on.
Yeah, one question. Any tip about waiting for the week, you know, because sometimes I got that for each closed and then
again,
just, I don't know, 3 minutes happens and...
Let me explain. Again, it is down to you guys. The reason why I know the answer to these questions without you even having to ask me them in full, so I'm not being rude, is that I've broken this strategy down layer by layer to create the 12-week workshop so I can explain all of these things in details. So I'm not being rude when I cut you up. What I am just trying to say to you in this scenario again is you have to just execute. If you're the trader that wants to wait for the wick, all you're waiting for is for extra confirmation. That's the trader you become. But there will be times when the wicks do not, the wicks will not form and it will continue in your direction. That means you become the trader that takes the breakouts or the initial momentum move. You are not going to know the answer to that question unless you execute enough trades to figure out what is and what isn't working for you. And the reason why I'm not giving definitive answers is because I don't have an answer. Some days I will execute, on the immediate breakout. But if I can see the market is hot and I can see that the euro is strong or pound is strong, man, I'm jumping in on the breakout ASAP and I'm not waiting for that wick. But then there are days where I'm a bit hesitant and I want to see a little bit more confirmation. So I'll wait for the wick. Does that make sense?
Hey, question, please.
Yes, Prince.
Okay, I have a very big question about this currency strength. So because I trade only one pair, sometimes I get confused about the currency strength. Should I use 15 minutes or 4 hours?
What time frame are you trading?
So basically, I damn my direction from the daily candle and 4H and then trade on 15 minutes, 15 minutes.
So, but if you get your directional bias from the daily, why are you asking if you need the 4H?
What I'm saying is to determine the strength of the currency strength.
No, but Prince, listen, I know your strategy and you only trade in the direction of the daily candle. This is not relevant to you, strength or weakness.
Oh.
Unless you're willing to incorporate the 4H time frame to then identify the strength and weakness at the time you plan to take the trade. But your problem is if the daily's bullish, and that's why I don't like using a daily, but if the daily's bullish and then you have a 4H bearish close on pound yen, and then you check the currency strength and pound JPY and pound USD or pound Aussie dollar is bearish as well, then your daily candle becomes irrelevant, which means that you're not trading within your plan, which is in the direction of the daily candle. So you're going to have problems.
Yeah, I guess so. Sometimes.
I think you're doing it right and you know what you're doing. I would just stick to it and not worry about strength and weakness because you use a daily. And your plan is simple. If the daily's bullish, I take buys today. If the daily's bearish, I take sells.
Thanks.
Okay. Hey, Rox. I really wonder if it's this difficult to explain strength and weakness. Like, I'm so baffled. I've tried to explain this hundreds of times before. really baffled if I'm doing a shit job of explaining it.
It's not that difficult. It's just our thought, mindset, which makes it difficult.
Yeah, I guess you're right, actually. You're very right, bro.
Rox, please, I have a question.
Yeah.
Like, for instance, based on this current information on the euro US dollars,
yeah.
If we use the maybe two candle theory, here euro seems to be playing out, but if you check on other currency pairs, euro is significantly weak.
Correct.
So in that case, is it better to just stay out?
Yes, 100%.
Okay, thank you.
I think we can all feel the aura of the market today. And it's kind of got its middle finger up at all of us, hasn't it? It's really, really dead. And when you get that feeling, you have to listen to it and you have to stay out. Not every day is a trading day, man. I promise you guys, you'll make so much more money if you just recognize the days not to trade and walk away. That day is, and to identify those days is when you say, hold on, this doesn't make sense. Oh, there's a bit too many wicks. And nothing's broken any structures. That's the day to stay out. Because I can promise you guys, when the market is moving, you will see it. I mean, this sticks out like a sore thumb, does it not? Even before this even happens. If you woke up in the morning and you saw this, you'll be ready. But to wake up and see this, come on, man. You have to be staying out, okay? Unless something is super vivid and makes sense based on the strength of the market. So why is Euro Aussie dollar going down?
Because Aussie is very strong at the minute.
Very good. So if you want to sell Euro Aussie dollar, what do you have to do? You have to identify that Euro is weak. Is this going down? Not really. Well, it did on the previous, actually. Is this going down? Current candle is, that's fine. Last validation is Aussie dollar going up? Is Aussie dollar going up? Is Aussie dollar going up? Okay, cool. Now, as part of the two candle theory, you have a previous candle red, next candle red, based on Aussie dollar strength. You see slight weakness, not major, and you can look to take that trade. It's that easy. Or you go to Aussie dollar and say, Aussie dollar super strong. You had opportunity here, London Open, New York, and now this candle here. But everybody else is doing what? Focusing on how to try and get into all these trades here. You know what I mean? Can you see what I mean by identifying a very strong sentiment and then going with it? I mean, I guess I don't expect everybody to learn it, because if you did, then everybody making money. Do you know what I mean? And then there just won't be a market to make money from, I guess. Maybe that sounds stupid, but you get the point. Like, it's really powerful that, and a very, very powerful skill set that you can have to be able to identify what the sentiment of the market is when you're planning to take a trade. How many traders, retail traders out there do this? And I'm not saying they don't. I'm just saying how many do. Or how many of you do this before you take a trade? Imagine if you just add this one element to what you're doing as a trader, what your results could look like. It could be immense.
It's a good thing to factor in.
Yeah?
I was just saying it's a very good thing to factor in.
Definitely. As an added confluence. Then what do you do next? Well, you add more pieces of the puzzle. Did this candle close bearish during a high volume period? Is the confidences line up? Yes. Okay. Here's my breakout level. Here's my retest level. Would you take a trade after this?
No. Personally, no.
Good. I'm glad. You can't take this trade. I know it's closed bearish, but it doesn't make sense to take this trade.
That's getting a bit overextended.
Correct. We have identified mark here of price failing to break the structure. We're never going to take a buy, even if these candles are bullish, because we haven't got a level to work with. We're identifying price failing. If price breaks above, then we can start looking for buying opportunities. Mark our structural low. Yeah, that would do, I guess. Here. Could we take this entry here?
Yes.
I think we have a little bit more room to the upside. And then again, you mark the high and the center. You have your retest, and now you have your breakout.
Yeah, it makes sense.
Let's say in this scenario here, price is failing to break above. We have an area in the market with price failing to break. Look, we have a bearish close. We identify not just the bearish close, but Aussie dollar is strong today. This is a 6 o'clock candle. Can we take this sell? Of course. Probably be a breakout trade in this instance. Can we take this one? Of course, 50% retracement, probably a nice retest here. Would we want to take this one?
Getting a little bit gone.
It's getting a bit sketchy, isn't it? At this stage. So we'll probably stay out of it. If we go over to Aussie dollar CAD and we identify that this candle's closed bullish pre-London, can we take this trade?
Yeah.
It's the biggest candle in the sequence for how long? A very long period of time. Could we take this one? I think we could. Again, it is
risky.
Down to you to make a decision. Some may not. I guess, you probably wouldn't take a breakout, but you might take a retest and you target back here. Could you take this one? Again, some traders may, some traders may not. But if you take this trade, you're pushing your luck, in my opinion. Because I'm not looking at this anymore and say, oh, I just want a 1 hour trade. I'm looking at this saying, Lord have mercy. If I went to bed early enough, forgot to my charts, I could have taken this and had this range. Now I'm thinking about taking advantage of this range. Do you understand? It's better to be early than late. And that is something we've all got to get comfortable doing, because the reason why you don't get it early, because you don't have enough confirmation, and not enough confirmation or evidence. No, I think you've got evidence, but not enough confirmation means what? Lacking confidence. We don't want to be traders that lack confidence. We want to be traders that have the confidence, and with confidence means we want to get in early, not late. This is FOMO. This is Lamborghini in a year. Okay. If the breakout is giving you a 1-to-1 break even, stop loss is safe. No. If the breakout was giving you a 1-to-1 to break even and stop loss safe, Dan Rodriguez. No. If the breakout, I'm not sure about that question, Dan. Question on trade management. Will we still manage our trades to base on level structure or wait for? No, you don't worry about structure. You manage your trades manual. And this is what I'm saying to my 12-week workshop guys. I'm saying manage your trades when you're ready to manage your trades, guys. Get over it. Like this industry talking all this shit about 1% risk and go for 1 to 3 targets and do this and do that. And yet everybody's still failing their challenges. Do what you're comfortable with. If you want to take profits at 500, do it. You'll soon learn that if you start getting a negative, start getting into the negative because of your risk to reward, then you're forced to go for 1-to-1. If you're getting negative rewards or returns, then go for 1-to-2. You've just got to figure it out based on how you're trading. So I want to say, do what, like somebody said in the 12-week workshop, oh man, I would have been 6R up today if I didn't go break even. I'm going to watch him now, because if he goes break even tomorrow and he comes back with that, with that same story, 3 trades this week, 3 break even, I could have been 8R up. I'm going to say to him tomorrow, what? Why the heck did you go break even again? You have to learn for execution. You have to learn for experience. Manage your trades how you're comfortable. Everybody thinks about how much money they can make versus how much money they can prevent themselves from losing. Hi, Rock. Suppose euro is strong and Aussie dollar is weak, 100% confirmed. Do we have to consider the market structure or instead jump into the trade? Jump into this trade. You do not need to worry about market structure, guys. You're not trading structure. I cannot stress this enough. You're trading what the previous candle has just told you and look for the supporting evidence to trade it. So Aussie dollar strength is what you're relying on here. You want to see this continuing to go in theory, you want to see this going bearish, and in theory, you want to see this going bearish, which it is. So you've got a confluence there to add, and then you can identify what is happening over here, and then you just jump into the trade based on that. Like this information here, you'd want to jump in. I think we're having some resistance from the dollar, to be honest with you today, because this candle is a candle that is lagging. Okay, this is the lagging candle here, because that's already moved strong bullish, and that's moved strong bullish. So to me, that means CAD is weak, meaning that this should be going bullish. Okay, it is going bullish at the time. There is a discrepancy here with USD as well. So I would avoid Aussie dollar USD and focus my attention on Aussie dollar CAD. Where's CAD JPY? Yeah, my focus would just be Aussie dollar JPY today, identifying potential yen weakness. That's what I'll be looking at, or something like that. Does that answer your question? I hope so. Look, is this example okay? 50% off. Okay, let me throw it out there to you guys. If you are still learning and working towards becoming consistent and profitable, this is how I will trade. Back at old school days, go for 1 to 3, take partials off at 1 to 2, and go break even at 1 to 1. If you hit take profit, you make 2.5 R. If it goes 1 to 2 and it turns against you, you make 1 R. And if the market is not going to go in your direction after it's gone to 1 R, you're at break even. But you know what's going to happen after telling you this? Next week, I'm going to get what? Our rocks. I had 5 trades. They all went 1 R, came back, stopped me at break even, then all went in my direction. It's going to be the same thing that you're asking me now, but in the opposite light. So you have to really figure this one out for yourselves, okay? But that is my humble opinion. I would say go for 1 to 3, more often than not. Break even 1 to 1, partials off at 1 to 2, full targets at 1 to 3, and be done. Mel, what is the key level? I'm not sure because that's the 15-minute time frame. I'd need to see the 4H to identify the candle, Mel. Rox, when I take entry trying to take the earlier margin of the move, there's a little fear in me that I'm on the right side of the market. Practice is very true. You're all going to fear doing this. It's not going to be easy. You just need to execute. Execute. You put in too much pressure on yourselves. You're not enjoying your journey because you want to get positive results as fast as you can to validate that you're a good trader. To tackle it, you have to overcome your fears by going head first. Grab the bull by the horns. Dip your feet in the water. Okay? You have to just do it. Identify the strongest currency and the weakest currency of the day. Find the movement and enter it. Forget everything else. That is correct, Dr. Shah. Forget everything else. Don't dive in shallow waters though, right? What I've been doing like today. Damn, man. Bro, you wasn't to know. There is just nothing you can do about it. Does anybody have questions? We did not go over examples, unfortunately, because we had a lot of questions. So tomorrow will be 4H and 15-minute examples. Thursday will be 1 hour, 5-minute examples. Friday will be 15-minute, 1-minute examples because we still had to go over a few things here. So Mel, USD Swiss franc. Let's get to the charts here. Yeah, no, nice, bro. And you know, when I see you guys posting trades and losing trades, I say to myself, why are you guys taking trades, man? But I can't tell you not to trade, because if I tell you not to trade, then the markets move. If I tell you to trade, the markets don't move. But I do look at the markets and I say to myself, I wonder why you guys are trading today, man. All right, so we're trying to figure out what Mel sent me. So it's USD Swiss franc on the 4H time frame, and you took the sell at the structure of the high. So the previous candle closed bullish, so I'm not looking for a buy. Was the 15-minute time frame that you sent me, was it a buy? Where is it? Is it a buy or a sell? Oh, yes, it was a buy. Okay, very good. So here we go. 50% low and high. This is not predicated just on the fact that that candle was closed bullish, okay? We also need to identify at the time that USD is showing signs of strength. So this is 6 o'clock, 12th of April. We need to see USD at 6 o'clock bullish. Okay. USD at 6 o'clock bearish. Okay. USD at 6 o'clock bearish. Yes. Okay. That's good enough. I'm happy with that. Yeah, I'm happy with that. And then Swiss franc weakness. Do we have any Swiss francs here? Oh, we kind of given up on the Swiss franc, haven't we? Okay, cool. So this candle closed bullish above a key level. Really nice. And let's take a look at the 15-minute time frame. On the 15-minute time frame, we'll isolate the area in the market where that candle closed. Here. Uh-oh. Uh-oh, Mel. I think I see your problem. Uh-oh. Now, does anybody identify why this trade was a trade that you could have avoided super easy as a buy? So Mel, look for the buy here, around this area, whatever. Doesn't matter. It was still a loss. How could we identify that this was not a good trade at all?
Middle
of a range.
You missed the move, Mel. You missed the move. Let's just make sure I'm not talking that. Wait, 6 o'clock close. That's 6 till 10. Oh, I nearly got myself in trouble. 6 till 10. All right. We let Mel off here. So that was the close. Okay, so that's the bullish close. Then you're looking for price to come back to a 50% range here. Okay, and then this is your entry. Yeah. Six o'clock close. Bullish, 50% retracement. 15-minute time frame. Oh man, I'm so inclined to tell you this wasn't a good trade, but I can't. I guess this is absolutely fine. I don't like to be biased here. I guess this trade is fine. I think what I'm doing in this scenario, Mel, is I'm saying, cool, I know this is a pullback and all of this information here means absolutely nothing to me, right? So I am looking for that bullish close for a fact at this 50%. Not worried about the range on the 15-minute time frame, guys. We're only anticipating after this bullish candle has closed for it to continue back to the highs, right? So we don't care what's happening on the 15-minute time frame. What we're anticipating is eventually that previous 4H candle is going to go up. In my opinion, this is a good trade. But what I do, and I don't want you guys to think I'm trying to avoid losing trades here, but what I would do is this. Cool. I've got the bullish close on the 15-minute time frame. The previous candle closed bullish. I'm seeing signs of dollar strength. We've come back to a 50% retest. We expect the next 4H candle to go bullish. Let's just move this a little higher so that if the momentum shift kicks in, we get triggered with a buy stop. Oh, yeah. Mel, you're screwed. You're absolutely screwed on this one. I think it was a great trade. And even if you'd done that, I think you would have been triggered in. And it just is what it is. Well done, Mel. Great trade. On to the next one. Okay. That's it. Right. Damn it. I hate it when that happens, but it's very good for us to see because this is a reality of trading, isn't it? I guess. All right. So, Daryl. British pound, USD, 2 candle, USD weakness, wick first, then body, 15-minute bullish candle close. On the 15-minute time frame. Yeah, this is fine. There's nothing wrong with this trade. Okay, this is a great trade. Your honesty in trading career save effect. I can't lie, man. You know one thing that I'm going to touch wood for and continue to be proud about is there's been no slander on my name, man, in 3 years. I can't be blessed because, well, I must be blessed, but there has been no slander on my name. Touch wood. Do you know why? Because no one can come back for me for anything because I'm just talking the facts every single time. Like, you can't dispute that. There are, and I don't like to talk like this, man. This is just this waste of our mental energy. This is waste of our peace, waste of everything. But there are mentors that if you go on YouTube, they'll be like, this was a terrible trade, man. You should have put your entry up here. And this is where I would have triggered into the trade. You know, I'm not that type of guy. I much prefer to be honest because guess what? One day it will catch up with me. And I'm very good. I haven't left no trails because I've been honest all the time. Anyway, shout out my own praise a little bit. You know, sometimes you got to do it. Right. So tomorrow we're going to do 4H 15-minute examples. I feel baffled after the session, to be honest with you, because I thought I really clarified everything yesterday. But I will say this, if you do have more questions on this, use this time now to ask me questions because I can promise tomorrow we're just going to be plowing through examples. I really don't want to go over these kind of these topics again today. So do we have questions? Thank you, Brown Boss. Thank you, everybody. USD string entered on the news. What? Oh man, I still don't understand why you lot trade USD Swiss franc. There's a reason I boarded this community, because of your honesty and integrity. Thank you, man. I appreciate it, guys. Thanks for your message, Noah, Shankar, everybody else. Do we have other questions to just clear up our understanding of what's happening here? Guys, I
Hey,
promise.
Rox.
Yeah, hi.
Hey, I just got a quick question in terms of the currency strength.
Yeah, sure.
Would you recommend, just to make things easier, at least in my perspective, just check the dollar, the Dixie? Wouldn't that just give you an overall?
No, it doesn't. We used to use the dollar index, I think about a year ago, year and a half ago, but since the pandemic, it just doesn't line up with the markets. However, if you want to use it, by all means, go ahead. I personally will say to you guys, honestly, all I do, look at this candle close, rely on the 2 candle theory, next candle bearish, gather some evidence to see if USD is weakening. If I get that, then I'm jumping into the trade based on this closing bearish, this closing bearish. Oh, this closing bearish, actually. Sorry, that's your answer to your question. Okay, bro. If you want to use it, feel free to do so. But I don't personally like it. So now this is what I was saying with Mel's situation. If I identify this, I may have entered, place my sell stop here. Now that it's pushed back up, I get a better entry. And you guys see me do this on the live, and I'll go for something like this, maybe. Like that. Oh, this is looking pretty. But the problem is looking pretty and trading at this time is just not, it doesn't go hand in hand. So now I'll set this up. I say I'm relying on USD weakness to confirm that. Previous candle must close bearish. Previous candle closed bearish. We've got a leader here, which is turning red. Previous candle closed bearish. We're getting wick rejections here. Confirms a sentiment at a 50% retracement level. Looking for yen to strengthen, moving bearish, moving bearish, moving bearish. So I am just relying on USD weakness. Pound bullish. We got the rejection. Aussie dollar bullish, I guess. Yeah, I mean, it kind of lines up. It makes sense. So this would be a scenario that you say to yourself, okay, fine. I've now just identified that USD is weakening. We can't rely on yen strength, but looking across the board, we are getting more evidence of that USD weakness. So, you know, I feel like this is a trade I can take. Daddy, don't lie. You was going to take this trade anyway, even if I didn't set this up. You was already ready to press the button, dude. Finviz, nah, don't use Finviz. Don't understand it. Too much science for me. We have used it in the past, but seriously, it's too much science for me. And remember, anything like that is always lagging. Does 2 candle theory work better at a certain time? Yeah, it works better when the markets are moving. And you can identify that through the candles and the market sentiment. Guys, have you just ever woken up in the morning and been like, damn, these markets are moving? And you jump into a trade and you're like, wow, that was the quickest trade of my life. Like, you need to kind of have that feeling every day. If you come to the markets and you're not getting that damn feeling, then you just don't trade. And that's when the 2 candle theory works best. That's when any strategy works best, when the markets are going through that stage. Rock, what's one behavior of gold that helps us? Nothing, unfortunately. Gold is in a league of its own. It doesn't have anything to support it, in my opinion. Rox, are you seeing Swiss franc strength currently? Oh boy, I hate Swiss franc. I really hate Swiss franc. Strength, no. Yeah, maybe. Previous candle closed bearish. You got that kind of 50% retracement. Was there an entry in this? Oh yeah, there was a little a bullish candle close here. Then from that level, I'm looking for the 2 candle theory in the 15-minute to get to the 1 minute. Oh no, that's painful. You probably wouldn't even get an entry in that. That's the 15-minute close bullish. That's the 15-minute close bearish. What the heck is going on? Wait, I've done something wrong here. Where's that damn candle gone?
You went to the 5.
Oh, did I? Oh, yes, I did. Okay, fine. That's the bottom line. Well, then I don't want to use it, but that's the bottom line of the 5. Okay. Okay, makes sense. Then the 5-minute close is this one. That's a continuation. Oh, no trade, whatever. Swiss franc strength. I only have one Swiss franc here. Let me take a look at what is another Swiss franc? Swiss franc JPY, huh? Swiss franc needs to be pushing.
Yeah, bro, rocks. In particularly, I took a breakdown recently on GBP CHF.
Yeah.
And then I made a break even on Euro CHF when they did a breakdown like an hour ago. Just wondering on those.
All right, dude. Let me check. So
Thank you, bro.
So Swiss franc previous close bearish. Bullish sentiment failed, indicating weakness in the pound. So bearish. Oh, look at that trade. I told you, man, not to take that one. Bearish. The pound is in a league of its own right now. It's showing signs of resistance. Previous candle closed bearish, quick rejection, meaning Swiss franc strength. This must close bullish, but it closed bearish. Too much discrepancies here, bro. And I'm going to tell you why. I mean, good luck with your trade if you're in it, but I'm going to tell you why. What moves the market on a daily basis, guys? What currencies more often than not?
Major one.
Yeah.
Euro.
The major one is USD.
Yeah.
Then, I mean, definitely Euro, but I'm not a fan of Euro, but definitely USD, Euro, Pound, and Yen. Okay. So if you're trading Swiss franc, in this scenario, you don't want to rely on Swiss franc being strong or weak. You want to be relying on Pound, Yen, Yen being strong or weak. Wow, you learn new things to teach when you get questions like this. Does that make sense? So every day I'm coming to the market, I'm saying to myself, is pound strong? Okay. Is euro strong? Okay. And what's happening with the dollar? Then I identify where I see the most movement, and then I validate that by saying, okay, yen is weak, Swiss franc is strong. Like, you've got to practice this, but does that make sense? Or did I just confuse you again for like the 100th time on one session?
I think we need a masterclass just on currency.
Oh, Lord.
Currency strength.
I'm so done with it, man. Like this currency strength thing is killing me. It's killing me.
It's pretty simple to me, honestly.
Oh, I'm glad to hear, bro.
Complicated. It doesn't sound that complicated at all.
No, I just think it just goes against, like somebody said, what you've learned up until this point. Because you don't look at a single candle to give you strength. You look at this, right? And then you do this. And then once you've done this, you go down to like the 30-minute time frame or whatever, and then you start doing this. So now you've got what? You've got a market structure that's pushing bullish, a trend that's pushing bullish, a retest at a previous level, and then you do things like this. Not saying it's you, like I'm not taking the piss out of you lot. Like, you're my students, I guess. Like, I shouldn't even say this in the first place, but the point is this: that's how most of us have learned to trade, huh? That's the truth. That's how most of us have learned to trade. Near enough, thereabouts, whatever. Boo-hoo. But that's how it's been. So now we're not now relying on the fact that dollar is weak at this time. We're relying on the fact that dollar is strong at this time, because this is what you've been waiting for the whole day. So you take the trade. Now, it can fly up, that's completely fine, but what we know of the markets is that the sentiment, or more often than not, will remain the same if the sentiment is true. So if this previous candle closed bearish, and this one is closed bearish, and this one is closed bearish, we're starting to see a reaction from USD CAD and USD Swiss franc, then the chances are that this is going to continue bearish. So if you do take a buy, it might be a short-term buy, but because of the resistance you're seeing in the weakness of the dollar, it will only be a short-term buy. So you're better off working with the sentiment of the market, which is illustrating USD weakness, and hope for the best that the previous candle closed bearish, you get the 50% retracement, and this candle will continue bearish back to the downside. Remember, always entering when the candle is green. Whew. I've been on this hour 42 minutes. I'll tell you what, it's gone so quick. I don't know if we're enjoying it or we're trying to clear up confusion. But I can see that you guys are saying it's making sense, which makes me happy. And I guess you're just going to have to watch over it again a few times just to really understand it. I'm really hoping tomorrow we can just go through examples. And yeah, that's it really. Just go through some examples of 4H 15-minute. On Thursday, we'll go 1H and 5-minute. And then Friday, we'll go over 15-minute and 1 minute. We'll have a lot of content to watch and rewatch, make notes, and then hopefully you're ready to come back and start smashing it at that point. Remember, I said it is going to take about 90 days for all of this to sink in and for you to practice it and get familiar with it. Okay. Does anybody have any further questions? I'm here at your disposal.
Currency trend. I'm joking. Have a good day. Thank you.
Okay, guys. Thank you. And yeah, hopefully we cleared up some things again today. I guess yesterday we went over the kind of idea of the concept or the fundamental principles of the concept. Today we went over the strength and weakness. So I guess that's not a bad masterclass, is it? Tomorrow we'll look at some examples in the next 3 days on all the variations, and then from Monday. Anybody feel today that after yesterday you came to the market and you could see loads of opportunities, even if you didn't take them?
Yeah, sure.
Yeah.
Yes, I'm giving an example.
Good, man. That's what I'm talking about. So now your eyes have been opened just a little bit more. You can see things a bit more clearer again. That means you're growing in knowledge and wisdom. And then now it's just to fine tune what you've learned and apply it enough times to get that experience to then be able to mash up the markets when you're ready. All right. Everybody, thank you for your time. Thanks for joining. Very good turnout today. I'll get this rendered as soon as possible. It is an hour and 44 minutes long. So boy, oh boy. Don't take this trade, guys. This was just an example. I do not like the thin volume in the markets. It's not a bad trading idea, but the volume is very thin. And I prefer to stay out till tomorrow because I'm just not sure what is strong and weak. So we'll see what happens in the morning. But other than that, take care, guys, and catch you very soon. Bye-bye for now.